Are we streaming live now? Ready to go? Okay, thanks. Welcome, everybody. Whoops, sorry. Good to see you back, Ellen. Welcome, everybody. In 60 minutes, the market will open, and I'm going to review 5 different stocks with you. But I'm going to also tell you why Ford, ticker symbol F, is the one I think I'm most interested in buying at the market open. Let's look a little bit closer about which stock to buy. I'm going to share my chart with you and tell you why I think the markets are more likely to be going up in the next week and what that means for some of our trading opportunities. Let me get my chat window open. So let's see. Just commenting on weekly market, but think I didn't have access to the comments. Not sure what you mean, Helen. Okay. All righty. Oh, on Sunday. Yeah, no. Yeah, so the Sunday piece happens while I am asleep at night. So I record that about a few hours before. And so if you're watching me on the Sunday night program, that's me on a recording. Just, yeah, I would not deliberately ignore you. I would not. Yes. Oh, you were chatting in? Sorry about that, Ellen. Chat in your questions here, though, everyone, and feel free to get these questions answered. I think this is going to be an interesting little review, but let me just start right here with this interesting comparison between gold, silver, and the US dollar. Look at what is happening, okay? So you've got, we had all three, dollar, and this is silver. Silver is the blue line. Gold is, well, let me zoom in on this a little tighter so you can better appreciate this. For this period right through here, middle of June into the middle of July, do you notice how the US dollar, the green line, was trending higher? The silver, price of silver, the blue line, is also trending higher, and the price of gold was also trending higher. All three of them were trending higher together for that 1 month period of time. That can't last. See, most of the time it goes like this: dollar goes down, dollar goes up, metals do the opposite. But right through here, there was this period where they were all doing the same. What's going on? Well, what's going on is that people want cash, but they want cash equivalents through this period. This was kind of a people setting up to hedge against the Delta variant. Now, we'll still hear news about the Delta variant or whatever, COVID, the most recent COVID scare. But is the market actually concerned about that? No, not anymore. That's what this chart tells us. You see, when they started getting worried about the Delta variant, then people started hoarding cash. That's already begun to stop happening as the dollar has begun to drop. Gold is still kind of hanging around there, but it's not trending up as much as it was. And silver is trending a little bit lower. Now, right here, just this immediate bit where the US dollar started dropping off, notice that although it took a bit, the metals turned around and they started moving up again. And just on Friday, dollar went up and the metals went down. That's healthy. That's a normal market behavior, normal price interaction, what you would expect markets to do when things are not in a panic or in serious sort of financial meltdown trouble. And it's all relative. There's less trouble now than there was. Whatever. The main thing I'm trying to point out is people are calmed down. The markets are less worried, fearful, excitable. What does that mean for investors? Well, when investors aren't panicked, they invest, right? So that's a generally bullish sign for the US stock market. So I feel like it's a good sign that we can rely on as far as, anticipating stocks on the rise. I'm going to just bring up here SPY and compare it with QQQ. Okay, so what do we see here? generally speaking, over the past 2 or 3 months, these things are trending higher with the NASDAQ leading out in front of SPY. And well, actually, you know, for another comparison, let me add this one. AAPL times 2 plus MSFT. So this is an equal weighted portfolio of Apple and Microsoft. If you had a portfolio where you were 50-50 Apple and Microsoft, this is what it would look like. Let me change the line color to be a green or something. Well, let's make it really stand out. We'll just make it orange and make it a little thicker, and there we go. Now, here's the thing. Apple and Microsoft are together the ring on the end of the nose of the bull market. Okay, they're going to pull that market, and wherever they go, it's going. That's because Apple and Microsoft has such high market capitalizations that whatever those stocks do is most likely what the QQQ is going to do. And they're also components, Apple and Microsoft, of SPY. So where Apple and Microsoft lead the QQQs, they will also lead the SPY, meaning the S&P 500. So the NASDAQ 100 and the S&P 500, they're going to get drug in the direction where Microsoft and Apple are going. And as you can see, although they've come off their peak, we're still generally trending higher. So all of these things together are giving us the confidence that we're probably going to, you know, buy this dip. We're going to see investors buy this dip, and markets are going to head back up towards new highs. Now, I could be wrong. It could go crashing down. However, in the pre-market action already, we see here SQQQ is heavily being traded, and it is down, meaning the markets are up. And I don't have that one up just yet, but the pre-market move, oh, there it is, QQQ, is up 0.5%. So, you know, this is what we would expect starting off with a good market. All right, so why then am I interested in Ford? So as you can see in the pre-market movers here, we have VXRT, AUTL, and Ford all showing up on the list of stuff that's trending higher. We also have Uber and TripAdvisor, which I think are worth looking at. I'm going to go into each of these in detail, but I'm going to start with the one that I consider my number one recommendation. Now, let's see. Quick question on how is the Aussie yen doing against the markets? That's worth doing. Before we go on, let's go ahead and add in the Aussie yen comparison, and we'll do AUD JPY. But to do that, we've got to kind of set the scale properly. Otherwise, it doesn't quite look like we're going to move that over to the left scale. There we go. So Aussie yen is trending downwards strongly. That's interesting, isn't it? Because really, if this and the NASDAQ are highly correlated, shouldn't it be the case that this is going to, you know, drag that one down? Well, part of what's going on there, remember that over the past month, you know, through here, the whole Delta variant thing made people move money towards the US dollar, made people pull back, global investors pull back from taking risks. That's what this is all about. But as I said, the chart showed us in the metals and the US dollar that people really aren't afraid of, you know, a new wave of COVID, a serious new wave of COVID. I mean, I don't know, maybe governments will do lockdowns and whatever else, and we'll go back to what we did a year ago. Maybe that'll happen. But that's not what I'm talking about. I'm talking about how investors think about this. Are investors actually afraid of what's going to happen economically, regardless of whether, you know, don't forget, the whole COVID thing lasted, it's still not over, a long time, a year and a half, right? But investors were done with it in about 40 days. In just in a few weeks, they had stopped panicking and they bought in and been buying more or less ever since. So that's kind of what we're trying to gauge. Are investors going to stop buying right now? They might, But so far, indications are no, they're going to keep buying. So even though you have the Aussie yen coming down here like this, I think that the NASDAQ is going to pull the Aussie yen up and not the other way around, especially because notice what's happening here. Aussie yen's coming down, except right where we are, we're kind of sitting more just at this period right through here from, late July until now, or past couple of weeks, it's kind of flat on the Aussie yen. And so, I mean, yeah, maybe the Nasdaq, maybe everything's going to come down and follow the Aussie yen because global investors are pulling back so hard. But I just gave you why I think that is. Yeah. What about Agoda and hotels.com? Not sure about Agoda, but hotels.com. Yeah, we can have a look at that. So anyway, I feel like the last 2 weeks here are actually showing a little bit more. Yeah, I mean, there's that, but in general, I think they're showing a little more support and creating a situation where they could turn up. So it's really more about what are the U.S. markets doing, and the U.S. markets are very clearly trending up and going up today. This whole big drop on Friday that occurred was all about Amazon. Amazon got rocked for 8% because they said, we're probably not going to make money so fast. Don't expect too much of us, guys. Jeff's gone, COVID's getting over, all the easy money's gone. We probably won't make much money. They're sandbagging. They're going to make a ton of money. They're going to have a great next quarter. I think Amazon's a fantastic buy. However, if they're right that COVID is getting over, that people are getting over and getting done with pandemic attitudes and behaviors, then it has to translate into people are going to travel. And if they're going to travel, then they're going to be looking at a variety of stocks. I think one of the early indicators is going to be the booking companies, the travel agency companies. The one I like the best of those is TripAdvisor. Um, I I don't know about how it goes with you guys. I like to check TripAdvisor when I travel, but I never book through it. I always book directly with the airline. Occasionally, I'll book through Orbitz. I like Orbitz. Been using that for years. I like Kayak, but I've never actually booked with them. So I don't know if it's just old habits or what. But I love getting information from those sites. So, book directly with the airline website, or for hotels or stays at Airbnb, book directly with those. So I rarely use these trip sites to book. But like I say, I love the information I get off of them. So I don't really know if I'm, if other people do that same sort of thing. They just read, they don't actually buy. And it makes me wonder about the prospects. Um, um, yeah, wow, Amazon's getting worried, says Helen. They really should make less. My friends in the US who read a lot stopped buying Amazon and helping small mom and pop bookshops. Well, yeah. Now, I would give you that. If I ever thought there was a chance, you know, nobody likes big tech has control type companies, and that's all about Amazon trying to do their social engineering and stuff. Yet there are some things that it's just not practical for me to buy elsewhere. So yeah. Helen says I use travel sites for info comparisons. Well, see, I just wonder if the fact that people use that for info comparison means that they are not really going to make a lot of money. But somebody must be shopping on them because people keep buying the stock, and the companies tend to be earning money. Although TripAdvisor has struggled to actually earn money yet. But I'll come back to TripAdvisor. What I really want to talk about is Ford. What is up with Ford? Well, the stock is up today. Look at this move, though. I think there's a really interesting dynamic that makes it easy to trade. You've got, resistance right here. I'm going to actually lower that down so it sits there. That way I've got 1, 2, and 3 resistance touches, right? That's why I'm putting the line right there. And then notice that when it gets below that line, shares get bought up really fast, right? Notice that anytime we've going up, we see a kind of big green candle, we start selling, 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 big green candle, selling. But this selling is not as strong as all that. Earnings came out. What happened with earnings? Well, they were estimated to lose money, but they made money. Huge surprise, right? So since earnings on this day, people jumped in, they sold off, and now what? Well, today the pre-market shows that Ford is up about 0.5%. That's about the same as the S&P 500 or the Nasdaq is pre-market. So maybe that's nothing to get all excited about. This headline right over here, though, Ford can revalue higher as chip shortage eases. Well, so chips are finally starting to flow, which means cars can get manufactured, which means stuff can happen. The 20-day average volume on Ford is 1.2 almost million shares, and so far, pre-market, they're already having a volume of a third of that. So that's a lot, and it's not about earnings. It's not about that news right there. Hey, Ford might do well. No, that's not big news. So what this is, what's going on with Ford is that's probably very eager retail buyers or institutional buyers trying to get an early jump in the markets. Or it could even be Ford itself buying back its own shares. Large amounts of Ford being bought before the stock or before the market opens makes me think this is a good trade. So how would I set up the trade? Here's how. I'm going to set up a price range for buy and sell. Is that? No, I want to look at something a little different from this. Where's my trade drawing? Apologize, I'm not finding what I usually use for. Oh, it's hiding behind my Zoom thumbnail. Okay, there we go. Long position. That's what I'm after. So Ford's opening price is looking at right now. We're sitting at 1401. Let's look at the chart, see where that is. It's not too far from where it closed, just a little higher, right? Nothing dramatic. The only thing that's dramatic is the volume. Volume is pushing that higher. So what I want to do though is I want to take a nice quick profit and be able to move on. I'm going to bring the stop all the way down below the low there. So, I've got a $1.30 stop, but I'm going to reduce the target just inside the old resistance at about 65 cents or so. This gives me about a 65, I'm going to call it 70% chance of winning this trade. And so if I get the open, I've got all this that I think is going to give me support. I've got all the way down here just in case, and then I'm going to take that profit right as it gets back up to close to, not even at the old high. I think I can do this trade 2 or 3 times. I think I can get in, take the profit, and then find another place to jump in again, because Ford's probably not going to do this. On the other hand, if it did do that, I'd want to sit back and not take the profit. So I'm not going to want to put the profit in right away. I'm going to want to just put in the stop and then make that a mental profit target. So I'll watch it, and when I see it get up into that area, then I'll either take the profit or just move the stop up and let it ride. So how will I execute that? Well, if I show you here in paper trading, I'm going to, we'll come back to this, that Microsoft trade's doing famously. So I'm going to do just the stop loss, not the take profit, right? If I was working on a 200,000 account like this paper trade is, risking 1%, would put me at risk in about 2,000. Oops. I think that one, I think I hit the enter key and I put forward in order, but I didn't. Let's do. I'll just delete that. Just for I don't think so. Wonder if I can modify that. Limit quantity 9,000 shares with a stop loss of 14.15. Yeah, that's okay. I'm going to go fix that order. I accidentally hit the. Okay, so let's try this again. So 1% risk, right? And the quantity is the dollar amount is $2,000 because $200,000 account, and it's 9,000, right? Well, the stop loss isn't going to be just 25 cents. I'm going to set the stop loss clear down here, 1272, 1270 something. So we'll go, $1.25. No, $1.50. $12.90, $1.75, $65, $1.65. There we go. There's my stop loss, $1.65. That gets me down into the 1275 area. And I'm going to look to take profit about 70, 80 cents higher, somewhere in there. But I'm not going to put the take profit order in. I'm just going to go see, and I only want 1,300 shares based on all that pricing. Now, if it were only a $20,000 account, I'd still have all this stuff. I would just risk, instead of, let's just round this to 1,400 shares. If I had a $20,000 account, I would just risk 140 shares. Okay. That way, if I got stopped out, I'd only be losing $200, 1% of the $20,000 account. Now, here's the moment for disclaimers. I'm not a licensed registered investment advisor. I don't have special expertise that will guarantee gains on this trade. I am not giving advice to you directly. I'm just setting up an idea for educational purposes only. You'd have to do your own due diligence on this trade, see whether or not you think it's okay, whether or not it fits your risk profile. Don't just blindly jump in and make the trade. Trade at your own risk. Okay, there you go. I'm, as they say in the Wall Street bets world, just consider me I guess I won't use that word. Unknowledgeable person who likes the stock, right? Anyway, whatever. I like this trade because I think the opportunity is very defined, and there is the chance that this thing could turn around and have a longer term upward trend, right? Okay. So let's see. New cars purchase price drop because backlog. Yeah, that disclaimer is complete. Yeah, glad you have these problems too. Yeah, I just hit the enter key and boom. And oh, so if I ever have that problem, it's been years since I've had that problem on live trading. But it happens. If I ever have that problem on live, what do you do? What do you do? Well, what I do, I just immediately exit the trade. I have lost so much money sitting there going, but maybe the trade's okay. Wait, I'll wait. No, wait, just if I ever make a wrong trade, make an error, and then I lose, several hundred or several $1,000s, I look at it and think, if I lost 25 or $50 just because I immediately exited the trade, I'm a lot happier about that than losing hundreds or thousands of dollars. So that's my knee-jerk reaction now. Just get out. And if I like the trade, get right back in, right? And it used to bother me, but it doesn't bother me anymore. So because this is paper trading, it's kind of weird. I'm going to have to go in there and change that. So, all right, you get the idea. We're going to go in there and we're going to put that order in, and that's the real one. And that other one, we will. It actually made it look like it filled. That's kind of weird, but I want it to cancel. So I'm going to have to figure out how to cancel that. This one is working. See, that's correct. This one is not working. Good. Can't even. Okay. So in the past, I've been doing this FTech, this AR, these things are just sitting here, not going anywhere. I should close these out. But the Microsoft trade, this trade just continues to trend in my favor. And this is what I want Ford to do. So I don't have a take profit on it. I do have a stop loss, and I'm just going to raise that. But we'll see if we get to that before the end of the session, because there's more I want to cover. So that's the yeah, make those wrong trades often. My impatience. Yeah. Learn by doing, Ellen. So anyway, I want to talk over these other trading opportunities. So let's look at these ones really quick. VXRT. VXRT is actually up 780 or so, up about 18%. So this one looks really interesting to me, and that's from the pre-market data. So this one's trading, it's going to open somewhere in this vicinity. And look at that. See, big downward moves and then a big upward move. Okay, so VXRT is connected to Moderna recently through some news. So that's one of the reasons it's jumping. But what I'm noticing is just here in this recent, anytime you get a big red, you rarely get a big green that fully encompasses the big red candle. There's this one, and that took off, right? This stuff doesn't. I mean, we don't typically have that. There's this, it came down and went back up, and although it kept going down, this area right here is kind of the support it held before it shot up. So if I'm looking at this and I think, hey, we already held some support and now we're rapidly grabbing new support into here, where is it going to go next? Well, I think it's going to challenge these upper areas, and that alone just moved from 7.7 to about 9. I mean, if you had a $77 stock, $78 stock, and it went to 90, mid 90s, or even 100, you'd think, wow, that's great. I want that trade, right? This is the same thing in, percentage wise. So, so this is a really interesting trade. So why didn't I do this one instead of Ford, right? The answer is earnings are coming up, and they're not coming up this week though. So maybe there's a good 1 week trade in there. What I like about Ford is past earnings. And so we are not likely to get this huge surprise move taking you out. Did you finish gap trades? I missed the last class. Yeah, we did. We did cover the gap trades. So hang around. I always come back to that. It's one of my favorite things. This, in fact, speaking of gap trades, would qualify as a gap trade if it opens there and then closes higher. And the gap trade would say, not that you get in there today, but that you get in the day after. So Tuesday, right? If this closes high, then that's a gap setup. It's crossing the 10 period moving average. It would make for a nice setup. I'm suggesting we could actually buy this thing at the open, and if it has a good day, it's got more traction to just keep going. However, earnings are coming up, so that's a little squirrely, but it's still a pretty good looking trade. I like AUTL as well. It's a similar dynamic and also has the same problem. Earnings coming up. This one is within this week though, so AUTL is going to open up higher. And oh, sorry, it wasn't VXRT that was connected to Moderna. I think. Well, no, I guess I better just go check here. What do we got? Yeah, AUTL and Moderna are connected, and VXRT is not so much connected to Moderna as just COVID. Yeah, application for S-only oral tablet COVID-19 vaccine. Nice. Pills, not shots. I'm interested. If I got to do a vaccine, so I'm more interested in that. Vaccine. Okay, that's cute that everybody wants to call it vaccine. Whatever. We'll just leave that one alone. Did you read GlaxoSmithKline has stock in Wuhan Virology Lab and other labs doing gain of function research? Can you verify? I haven't heard that. I don't know how it would make sense that Wuhan Virology Lab, I don't think it's a publicly traded thing. I don't think there is such a thing as having stock in Wuhan Virology Lab. Other labs doing gain of function research, I don't even know who they are. If I found out who else is there a public company doing gain of function research? I mean, that all by itself would be interesting. You're not going to be likely to hear that from a mainstream news source. And while there are a lot of people who I think are credible sources, um, you know, if you say anything against, um, you know, COVID vaccines, um, the the status quo establishment, WHO, and that sort of stuff, then you're considered less, and I mean considered less reliable, right? Considered less reliable by the people on the other side of the argument, of course, because differing opinions, right? The problem is when you're on the argument of anti-establishment, on the side of anti-establishment, the problem with there are people that are way out, that are just wacko, right? People that are jumping to conclusions, they get wrong information. And then there are people that are trying really hard to get it right, but they're just working with whatever information they have because they're not usually privy to the most official sources. And if any of these people are right anywhere on this spectrum, then the people who actually have the info are either holding on to it or obscuring it, right? Or it's possible they're just straight up telling the truth. Yeah, I feel like that one's a little less likely. I mean, there's just too many inconsistencies between the mainstream narrative and stuff we see. So I don't feel like the actual truth is easily observable. So as a trader and investor, it's not a matter whether I think this person is right or wrong, but I got my opinions. But as a trader and investor, I have to say which one of these pieces of information am I going to actually try to act on, right? And I tend to lean a little bit towards the anti-establishment, um, but but take that with a whole lot of salt because, well, anyway. So stock in Wuhan lab, I mean, already that sounds further off to the left of the spectrum. No, yeah, so maybe not stock, maybe just investment. Does GlaxoSmithKline give money to Wuhan labs for gain of function research? Well, the World Health Organization did. I mean, that was the testimony in front of the U.S. Congress. So, does anybody else give it to them as well? Well, there's a lab in North Carolina that gives money to Wuhan, and do those people give money to the North Carolina lab? Right? I mean, somewhere in there, I think that's the case. Now, if you're not talking about stock investment, you're just talking about giving money so the money gets over and gets to them. I think it's pretty clear that there was a lot of money from official channels given to the Wuhan virology lab. It was like, so what? People there did a bad thing in coming up with this. The COVID was a manufactured, a man-made virus. All that sounds terrible, and I hope somebody has the courage to stand up against whatever organizations felt like it was a good idea to unleash that on the world. But I don't have any control over, whether that happens. One thing I am interested to know is that a man-made virus will break down faster than an organically made virus. I mean, break down, become less potent, become less effective, be less likely to mutate into robust variants and robust strains. everything we're seeing with the COVID-19 virus is corroborating the idea that it could be man-made, because it's acting like one of these man-made viruses that gets weaker as it goes. The good news is COVID's probably getting over. Amazon is probably right to say it. Investors are probably right to plan on, yep, COVID's going to get over. Yeah. So, yeah, well, U.S. National Institute of Health did too. Yeah, 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 yeah. Really, if it kills itself, it would be good. That's right. That's right. That's the silver lining. You know, the political powers that be, they're playing with fire by thinking that they can give money to these people and sort of engineer society. People are getting tired of the conflicting information. They really are, and so it's dangerous to see where this might go. But the market isn't pricing in cataclysmic economic behavior. The market is not crashing because they're afraid that society is going to fall apart. Isn't that interesting? So if you think the governments are lying to you, wouldn't you think that that's going to create civil unrest and uprising and you know social disorder? The markets don't think so. So, you know, what's the way through? How can we go forward with governments lying? Well, I mean, you know, um, I would say this would not be the first time a government lied, and yet the markets seem to be okay with it. Yeah, yeah, truly interesting. The markets never care about social justice or health. Yeah, well, the right. So the markets care about efficiency, and the lack of it, the inhibition of that efficiency means that they can profit less, and therefore they would start pulling back. They don't seem to be doing it. So whatever it is that's going on with truth and lies in various governments throughout the world, investors seem to believe that they can navigate it. They can work it through. So we as traders are looking for opportunities. Yeah, that's what that is. All right. Well, now AUTL. This doesn't look like as great an opportunity to me. However, it is up 18%. It's at 630 to start AUTL. So 530 up at 630. It's way up here. This is going to be a gap trade. The question is, will it open? Will it close higher than it opens? That could be a really interesting trade. Problem, earnings, right? So I don't know. It's got a whole lot of potential to set up nicely, but maybe a single day trade. Maybe you get in, put the stop loss right there, right, just at the bottom of the gap. If it closes the gap, you're out, failed trade. But if it closes higher, you made profit, right? And then you got 1-2 days to get out before earnings. Maybe it runs, maybe it doesn't, whatever. So that would be the way I'd approach the trade if I was interested in doing that. The other one to talk about, Trip. Let's look at TripAdvisor and Uber. These are back on the travel trade. If people are going to get out there and be traveling and moving around, business travel in the case of Uber, vacation travel in the case of TripAdvisor, then we should see both of these stocks kind of make a rebound. I feel less comfortable expecting that from Uber. We've got a earnings coming up. They're estimated to lose 53 cents a share. They were estimated to lose 56 cents a share, but they only lost 6 cents. Big surprise. And yet, what happened? Even though the earnings were good, the stock stayed down. Well, it sort of stayed down here at this regular level. But where it is right now, that's the third band of those Keltner channels. This actually is a bullish signal. Closing down in here, first day that it closed down in here, 20 days higher, good chance that it is, or 20 days from now, there's a good chance that it's going to be higher than it is right now, like better than 60% chance, based on some research that I had done about what these Keltner channels do. And so I kind of like the idea that Uber might be sort of a buy right here. And there is pre-market activity going on with that, Uber. So it's on this list, right? Isn't it? I thought it was. Maybe it no longer is, and it was earlier. I don't know. I don't see it now. I apologize. I thought I'd. Oh, yeah, pre-market breakouts. Maybe this is where it was. Nope, not here. Okay, so yeah, Uber is off too, but it might have been up, but now it's no. This is yesterday's close. That's not the pre-market, is it? Now I gotta find this out. Uber. Yeah. Uber closed down 2.8% last time. So where is Uber pre-market right now? See if we can get a little data here. Well, Uber closed at let's get rid of exit pay. There we are. All right. Uber closed at 43.54 and it's up at 43.96 by 44.26. So it's going to open above 44. So that's interesting. It's going to open up in here, kind of like ignoring that red candle and coming right back up. So, I mean, that's a good look. That's a good look. But as I say, if you're interested in the travel industry, probably you're more likely to be interested in Trip. Yes, earnings are coming up. Watch out. Be careful. I mean, the opportunity here, though, I believe, is that they're only scheduled to lose 10 cents per share. Last time, they were scheduled to lose 31 cents a share. They lost a little more than that. But you see, this is the market tacitly pointing out that they're not losing as much as they were. And yet, what has the stock done since then? Gone down. It's gone down. And so it is less valued, even though it's going to lose less money. And how about these options? Look at these. Implied volatility goes up and then it drops down. This is kind of weird because implied volatility tends to get higher coming into earnings. See how it goes higher? It kept going higher afterwards before dropping down. This one here, implied volatility got higher, but just now dropped into the lower area. So coming into earnings, implied volatility is low. That's good because that means the options are relatively cheap. Market Chameleon has this really interesting look on TripAdvisor, pointing out that the great idea for this long call shows it having a 68-cent price compared to what they think is a theoretical value of 236. This is the 44, basically at the money call option, which expires on the 27th of August. So you got about a month's worth of time, and that's nice. Now, that's really a tough one to hold through earnings because volatility crush, you'd lose a lot of money if you held it through earnings. If you just held this right up to the day of earnings and sold it before they reported, this could be a really good trade. But if you want to hold all the way through earnings, which is probably a good idea, then this one might make more sense. They're suggesting 39 strike and 43 strike. I would say more like buy the 43 and sell the 46, something like that. That gets you even cheaper. The thing here is that by doing this, you've got a $4 difference, and the theoretical value is higher already than the market price. So they feel like the historical win rate of this trade is 50%. The historical win rate of this one is 38%, but the payout is bigger on both of these. So that's why Market Chameleon is suggesting these two trades. That being said, let's see. Looking for today's opportunities on the earnings. Okay, so check this out. The today's opportunities list has Trip and Uber on these, I think. Yeah. I should have had this up already. I apologize for the delay here. Oh, there it is. There's Uber down here. This is a calendar spread for Uber. That's actually a pretty good choice. And then this one is, where's Trip on here? I'm pretty sure Trip's on this list. Unfortunately, I'm not seeing it. Yeah, okay. So let's go look at Trip on Market Chameleon. I think I'll be able to just show you what I mean. Historical data. No, this is earnings. Sorry, there it is. Yeah, option strategies. Earnings. Yeah, this one. So the long 25 delta call 2 weeks before, and the historical close range close at the day before. All right. Of the last 12 observations, there's a 50% win rate for that one. If, however, you go 25 delta just 1 week before, and then you close it a day before, you win that one 75% of the time out of the past. Well, so that's interesting, right? This one here, though, if you buy it 3 days before and close it 1 day before, you only win it 12% of the time, but the average return was 30%, with the best possible return being 186%. So the idea here is that if there were some way to believe that Trip had the opportunity to move, kind of a big move, then just even a 3-day move in front of it could yield a strong trade opportunity. And that's the situation I'm trying to set up here for you in your mind. See, because look at this. That's Booking, that orange one. That's the competitor, and Trip is running lower than Booking. So another company that does the same kind of thing they do, and Trip is lower. So there's kind of room to run, right? We have low implied volatility. We're 3 days before earnings, so very possible you could grab this. And then look at this. See this huge space between the top and bottom volatility bands, and then they're squeezing down tighter as they go because Trip has been making smaller and smaller days, right? So we got these smaller days, we got these lower priced options, we got earnings coming up, and the possibility that this thing could pop higher, even before earnings, but also after earnings. 50-50 chance, but if it does, because these things are low priced, a move like that could really pay out much bigger than its risk. All of those things together, that's why I'm more interested in Trip than Uber. But I'm more interested in Ford than Trip even. And there are option plays that you could do on Ford. But let's see. Here we have a couple more questions. Have states opened up yet? No, 10 minutes. If more open up, Uber would sky. Oh, apologize. Yeah, so a lot of states have. I mean, Florida is completely open. Um, Utah, where I live, is pretty much open. I mean, you see masks around. I just flew to LA last week though, and was in California, and California has been open, but now everybody's in a mask. They're still going into stores and still restaurants and whatever, but it it reminds me of, like last year, almost not quite last year at this time, but maybe 9 months ago. Um, yeah, so California is contracting a little bit, and Uber is heavy in California. So Uber is feeling the weight. Further, state of California didn't like the fact that Uber, which is headquartered in California, wasn't paying so many taxes, and uh, they weren't paying taxes because all their Uber drivers were contractors. And so California figured out a way to get the lawmakers to say, you got to make them employees. You got to make all of your contract drivers employees. And then you have to start withholding taxes from their wages. So you pay those taxes to us. that's that's not self-serving and transparent and you know kind of a law, is it? No, I mean that's nah, couldn't be the government acting in its own institutional self-interest as opposed to interest of the people receiving the service or the employees doing the driving and any of that. Couldn't be that, could it? No, anyway. Um, yeah. So it might sound like it's good for Uber, drivers. Oh, they get made employees. No, no, it's not, because what happens now, see, an Uber driver getting paid, let's say $20 an hour. I mean, the wage depending on what they do. When they get paid that certain amount, then now they're going to have to get paid less per hourly because the taxes are going to get held out, and then then the stuff is, I mean, your taxes getting out, well, they had to pay taxes anyway, right? No, man. Uber drivers have a bazillion ways to count expenses, and most of them don't make huge bank anyway. So it was a fantastic way for Uber employees to actually get more money kept out of their taxes. But now being employees, their money has to be withheld. And if they're a low value, I mean, a low wage, low earnings, level employee, they don't make more than 40 or 50,000 for the whole year, they're probably going to get most of that money back on taxes. But state of California pension fund gets to hold on to that money uh, and earn interest on it between the time they pay it and the time they have to pay it back. So I I'm really anti-tax and anti-government when it comes to that kind of stuff, and I feel like you know California doesn't really have good excuses. The worst part about it is the fact that Uber is less available in California than it might be otherwise. I mean, I've used Uber all around the states, and it's just harder to get a California ride. So anyway, I digress. But did I cover everything? Trip, yeah, I think there's some real opportunity on Trip earnings. What do we got coming up for earnings that you want to know about? We've got um, Alibaba and um, coming up this Monday. Here, I got the earnings calendar in front of me. Let's go get it. So coming out today, we got HSBC, but tomorrow we got Alibaba and a couple other heavy hitters, Eli Lilly and Amgen. ConocoPhillips, right? So we're and then Activision Blizzard. Well, we're going to probably see pharmaceutical space, news and money moving around the pharmaceutical and healthcare space. Alibaba, we're going to want to watch, how does Alibaba do on earnings tomorrow or Wednesday, compared to Amazon. Amazon tanked, right? Alibaba's estimate, $2.22. The previous estimate was 170. They came in below that. So analysts are expecting Alibaba to do better, significantly better than it did last quarter. And yet the price down. So it's been a weird quarter. People turn in good numbers and investors sell, right? But look at what's going on with Baba shares. Jumping up, sold down, jumping up. It's like there's really strong support right in here where it is coming into earnings. So it's going to be interesting. In theory, they should drop too, just like Amazon, right? Well, I mean, I know they're not the same as Amazon, but they're sort of a combination of Amazon and eBay. And same situation. If people were really using Alibaba because of the COVID situation, well, but were they, right? I mean, you look at that in October, since October, down, it's gone. I think I'm really surprised that Alibaba hasn't been doing better than it has so far, but could be a real opportunity. I mean, even just a bit of a mild rebound could take them from below 200 up into 220, 230, right? Just getting to the old resistance up here. So I think there's possibilities here. You'll want to watch, probably wait until after earnings and then watch what the opportunity is. To find a place to buy in there. Oh yes, that's true. Jack Ma got pushed out running Alibaba. So that's true. The maybe investors are reacting to that. The CCP is having a little more say what's going on, and this might be the market's referendum on what they think of CCP's involvement. Yeah, that could very well be true. But that being said, if Baba jumps after earnings, I think there's a possibility they will. What does that say for Amazon? I think what that says is that 8% drop was a major overreaction, and there's an opportunity there to buy in on Amazon. Okay, we're just about a couple of minutes away from the market open, and the trade we're looking at is Ford. So we're going to want to look at a chart for Ford intraday. This will be a little bit of a delay, of course, on this chart. Well, I don't know. Maybe I can get my real-time account open and see the quotes. I don't know if I can do it in that short of a period of time, especially if I've got to install updates. Friday, Chinese yuan and Hong Kong stock index, CNY and HK stock index dropped a lot. Oh, is that right? Thanks for bringing that up. I hadn't even checked. That doesn't. This is the China large cap index. I mean, looks like it dropped back here, but on Friday I don't see the drop. At least not in the, Okay. Let's see if we can get this thing open before the market opens and we can watch it live. If not, then we're going to want to see Ford here in the 5-minute chart, even in the 1-minute chart. Let's go there. 1-minute chart. That's how it closed on Friday. We'll see right where Ford opens up. Oh, the China 50 and the Hong Kong 50. Okay, those dropped. All right. Here we go with market. And what is Ford doing? Ford is starting off 6, 7, 8 cents. Doesn't look like it's going anywhere in a hurry, but it is opening higher. Now that's important because see, in the pre-market, it was up, kind of came down, was sitting right here, and we're breaking the, upper end, right? 1402, 3, 4, and we're up at 1405, and that 1405 is up 7 cents. Oh, that's 1402 was up 7. So we were up 10 or 11 for a little while. Yeah. Big chunk of volume. And just the way this first candle is shaping up with Ford, I mean, Ford doesn't move around a lot. It's not like it's going to run up to $15 here in first 5 minutes typically. But we do want to kind of see, how does this first candle open, and then how does it play out? What's the stuff? Right now, we're kind of seeing, it's just back and forth. It went a little more up than down so far. We'll see if this, downside keeps going. But we're just kind of going back and forth. So we don't have a right out of the gate conviction on Ford that today is a big day to get in and buy. We don't have a big right out of the gate conviction that today is an important day to be a seller. Well, we didn't until I started saying that. Here is this thing moving. Okay, right there, 1395. That's kind of where the upper end where it closed on Friday. We would want to see support come in. We want to see people come in right here and be buyers in order to have long-term prospects. I mean, confidence in the long-term prospects. And that was pretty interesting, I must admit. Am I on a 5-minute chart? Oh yeah, this is a 5-minute chart. No wonder. Okay, let's get a 1-minute chart going here, so we can see how the 1 minute stacked up. So in the first minute, we had sort of a back and forth. In the second minute, we had quite the sell, but the third minute, we're roaring right back and up to the new highs. So I feel comfortable that played out the way I would have hoped for in the first, couple of minutes there. If I think that it's a good idea to consider a bullish trade, which of course is what I said. So, all right. Aussie holiday. Not moving much. Aussie yen not moving much because it's an Aussie holiday today. Got it. Yeah. Thanks for that, Helen. All right, everybody. Hopefully that was interesting and useful to you. We will come back next week to look at the opening of the U.S. markets at the beginning of the week, and we'll come up with a few ideas of what stock to trade. Until then, take care.